Greetings, it's Dr. Jeffrey Scott, and this is my Market MRI Pro market update for March 3rd, 2025. Doing this about 10:45 at night on the East Coast. What a day in the U.S. markets. Just do a quick check on the futures. They've been up and down right now. The Dow's up 41, Nasdaq's up 59, E-minis 10, and the Russell 2. But if you were watching the markets pre-market on Monday, the markets were up. And then, boy, did they not end up down on the day. Tough day in the markets, especially if you're still holding on to a lot of positions despite what we've been talking about being relatively negative risk-off conditions. I did want to thank those of you that joined me late Sunday night, 9 o'clock Eastern, for my launch, or I'd say pre-launch of the tool. Sold quite a few packages, not quite as many as I want to get before I shut it down. I want to get up to 25 users, and then I'm going to shut it down for probably a month, if not 2 months, to make sure that servers and everything maintain their quickness and their reliability, and then we'll open it up to a broader audience. So I thought I'd give you an update in the market and then mention where we're at with the product. I call this market sell-off on tariffs and growth concerns. Probably could throw in Ukraine as well. And my email address for this is marketmripro@gmail.com. As always, these sessions should be considered for educational purposes only. Anything I recommend has to be taken in the spirit of education and not investment advice. The intent of all my videos is always to show you the tools of top-down analysis and how I apply them. This is a tool that was built to my specs by my partner Praveen. I think it's pretty special that I'm going to show you tonight. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own, intend to buy, sell, short, go long any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. I have tools for multiple platforms, but I'm an independent trader. If you're looking for the wealth charts video, I just finished it. It'll be up by 8:30 in the morning on stocksanddocs.com. That's one of my favorite platforms. And really, it's because of the depth and breadth of that platform. Not only does it have some of my tools on it, but you have a lot of great educators, and it's still something I highly recommend and I still use. Again, I'm going to be doing my meeting in Orange County, June 6th through 8th. Greg Mills at gam72054@aol.com. One of the last remaining people, I guess, using AOL email addresses. Typically, we'll have 4 to 6 speakers. I'll speak half the time over the 3 days. You'll get my entire process, much more than just how I use the tool. I can tell you I love to teach, and the people that come to the meetings usually call that out. It's an honor to get the chance to share what I've learned from a lot of people, many of whom are no longer with us, and to help keep their vision alive through the teaching of how I trade, synthesizing the different things that they've done. I have a new group. It's called Top Down Trader. It is how you get on my mailing list. I send out a video like this every night, comments on the market. It's free. You get invitations to educational events. You get discounts on my products, and there's no requirement to purchase anything. So if you're interested, go to Google Group, sign in with your Google ID, find Top Down Trader, join, and welcome to the group. As I mentioned, I've got platforms. I have tools in many platforms. HGSI is really where Ian's tools are. I've adapted some of them, but much of what I can do, you can do with that program. Wealth charts, as I mentioned, stocksanddocs.com videos. TradeStation, I have a trading app with a lot of the same indicators. We have the indicators in TradingView. Metastock is coming. I'm excited for that. But I'm most excited for the launch of the Market MRI Pro, a tool that we really built to do everything that I do on a daily basis, do it quickly and in a single program. Launch webinar number 2 will be Wednesday night, March 5th, 2025, 8 p.m. I'll have a link in the remarks section. Also will be on tonight's top-down trader email. You'll see what I call stacking discounts, and I'll show you that it is not an inexpensive program, and that's because it is a program, not an indicator, and there's a lot of support costs, data costs, um, platform maintenance costs, server costs. So it's going to be $19.99 for the first year, and after that $7.99 for an annual subscription. I am providing a number of discounts. I will give $200 off on both the first year and lifetime on the second year. Not a lifetime one payment, but each year it'll be $5.99 for people who buy before March 10th at 5 p.m. If you sign up for my top-down group, I'll give you another $100 off. That brings it to $16.99. And if you can prove proof of ownership of my Wealth Charts Marketplace scanner, CAT scanner, just take a snapshot of that, $200. If you bought the TradeStation app, take a picture of the app. You'll know what piece that is, $200. And if you got my indicators on TradingView, I'll give you $200. So all in, if you have all those, you can be as low as $10.99 and then $5.99. What I told the folks on the launch webinar is I'm guessing on the $5.99. If I get over 25 people this year, and I certainly hope to based upon the success that we had on Sunday night, then I'll probably be able to drop that $100. But that's dependent upon how many people are buying it and because allowing me to defer the cost of data storage and server time. The more people, the lower the cost will be. As we go and think about tomorrow, Tuesday has got two Fed heads speaking. We'll be getting ready for the Wednesday beginning of the employment story with ADP on Wednesday, jobless on Thursday, and the monthly employment report on Friday. And Fed Chairman Powell speaking at 12:30. Can you just imagine the market sell off into the weekend again? I'm afraid that's going to happen, but we'll see. Still got a lot of earnings to go this week, including Best Buy and C before the open tomorrow. CrowdStrike in the afternoon, Nordstrom, Ross, a lot of big companies left, Kroger, Costco. As I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Let's take a look at the markets. We're going to start with what I call the daily briefing, and this is updated real-time feed. Every time you hit refresh during the day, in about 3 seconds, we'll update. One day close looking here, let's just rank it by high. So the highest mover was the VIX, VXX. I'm going to be adding a couple more things. I'm going to add Bitcoin to this, and then one other I'm tossing around what I want to offer. Maybe it'll be bonds, TLT. You can see here that the U.S. major index ETFs were all down percentage-wise, 1.5 on the diamonds to 2.73 on the Russell. Over here, you could see that the only thing that finished in the upper part of their daily movement was the VIX was up at 76%. Everything else finished in the lower part. That's a bearish picture. Over here, we can see that the number of new lows and new highs versus new lows. So the number of new lows when it's negative is higher, getting increasingly negative. Bull markets are not made off of new lows. So that's something that has me concerned about the short and intermediate term. If we look at the one-day change and look where the strength was, very defensive, real estate, staples, healthcare, utilities. And then financials next. We've seen this, we saw this over the weekend, and that's just a sign of the market rotating out of growth and technology. There's technology at minus 3.4%. And if you look at where they finished in their closing range, tech finished at 16% of the daily range, really at the bottom. If we look down here of the various 40-some themes that I have, we call it category theme. Let me just collapse that. You could see the only things that were up was Southeast Asia and Norway. Gold miners was down only 0.03, and what got killed? Uranium, exploration, production of oil, semis, genomics, biotech, And when I say killed, these things are down 3, 4, 5%. It was a rough day in the U.S. markets, any way you slice it and dice it. Over here, this looks at three markets, the S&P 1500, the NASDAQ, and the NYSE, and it asks four simple questions for each one. What percent of the sectors were up? Ranges from 9 to from 0 on the NYSE to 23% on the NASDAQ and only 9% on the S&P 1500. What percent of the industry groups were up? 16, 16, and 15%. What percent of the stocks were up? 21, 17, and 23. And then the fourth one just shows you within the Bollinger Bands, are we closer to the bottom and the top? And when you're less than 50, you're closer to the bottom. This is a weak market and one to be careful in. The question is, are we getting close to a place we bounce, and should we be getting ready to go long? Look at the timing brief here. This we got first to my weekly model, and on the weekly model you're going to see it doesn't count a new change until Friday, but I hinted at it over the weekend that all it would take is for the diamond to drop below the WMA, and you would see a red bar here, which means it went to a sell signal. All four of my ETFs with the asterisk that the diamond does not close for the week are showing a sell signal in my market timing model. This green bar is a 17-week, excuse me, 13-week rather, 3-month new high, new low, and it is not near reversal time except for maybe the Qs. If we look at the daily, you can see that the spiders and the Qs are both range bound. The spiders had a false breakout and are going to go down and test the bottom of the range, is my guess. The Qs, I drew this Darvas box thinking that this might capture it, but we've broken below, so I probably need to extend the Darvas box a little bit lower. I don't think I can't, no, I can move it, but I can't extend it. You see what happens when I do this. Ooh, I can. So I'm now under the working assumption that we're in a Darvas box here, and based upon that, I might expect this thing to trade up off of this bottom, but the way this market is going, I first have to see it before I believe it. You can see the Russell has broken down pretty hard. If we go into the U.S. indices and look at them in a little bit more detail, we can open each one up here. We start with the spiders. This is sort of where we had the double top, false breakout. This is where I think resistance and support is in the short term. Now, don't forget, we've had a massive bull run in this market. So is it a surprise that we're taking a pause? No. And right now, I think we're in a trading range. And unless we break below here, you buy it on support and you sell it at resistance. And this 200 is going to come up right underneath the bottom of that trading range and probably give us additional support. We're down 1.69 in the market today on the spiders. As I showed you before, it was a rough day across the board. If we look at the Qs, I do think the Qs are sort of in a sideways move here. We'll see if we can get back inside the box and go higher, but I think this is a consolidation pattern, and hopefully we'll break higher, but clearly there's no guarantee. And when you look at the weekly, it's not active here. Okay, and you can look again at a longer time frame. The Qs have been especially strong, and each time that we pull back to the 200, it became a great place to buy. So there's no reason not to think that this could be a great place to buy. I'm just a little bit worried about the market here. The diamonds, let's make this big and take a look at that. Similar picture. It is down to this trend line. What's happened at this trend line? It's bounced. So we're seeing a lot of reasons to expect a bounce, but will a bounce be anything more than a dead cat bounce like we saw Friday before we go down lower? The Russell's in a free fall. Does it come down to this level around 198 to 200? It's only another 3 or 4% drop, probably. This could reverse any time, but boy, is that a bearish looking pattern right now. What else do we have in this view? We've got the volatility index, the VIX, and this is what the VIX did August of 24 at a bottom. Yes, we spiked here, and the VIX was up in the market on whatever day today is, Monday, 16%. But is that going to be enough to say we're done going down? I don't think so. I think if I had one of these, I'd feel a lot more comfortable. But hopefully we don't get one of those because there's a lot of hurt before that happens. And the dollar, I can just show, maybe I'll expand it. I like expanding these. And you can see the dollar has bounced off the 200. We'll see if it can get below the 50 here. And then what happened, it broke down in the market on 0.52 on Monday. Now, why did the dollar have this drop on Monday? I heard somebody saying that people might be raising cash to buy stocks. I think they're buying bonds. Um, in fact, let's just cheat and go over to the JAS layout, and let's just type in TLT. Bonds have been dead for a long time, and you can see they've had a big run up here to the 200. It'll be interesting to see if they can get above that. If bonds go up, you know what goes down. So tell me why, when we look at the market on Monday and over the last week or so, why are rates falling in the setting of inflation concerns, tariffs? I think it's an economic concerns, and are people more worried today than they were 2 weeks ago about a possible recession? Gold popped in the market after a big pullback here, was up 1.32. Come down here, you can see silver also had a big gap up, 1.32, both the same percent. How could that happen? Let's look at that again. Yep, very similar move between the two of them. Oil broke down and was down another 2.5%. And natural gas, after pulling back in an orderly fashion down to the 17, bounced and had a big move up 7.92. And you could see the 10-year down 1.2 and the 30-year was down 1.15. The next is daily brief. The buckets give me a sense of how likely are we going to reverse tomorrow. We have clearly moved towards the left with increasing stocks at the bottom of their Bollinger Band. Let's just highlight this, and we can see we've got one day we're at, what is the number? We're at 25 on the NYSE. That tells me that 25% of the stocks in the NYSE are below their Bollinger Bands. That also suggests we're getting very close to a bounce. You see the theme here? We've pulled back to support to the 200-day moving average, and we're showing technical signs that we're ready for a bounce. We're at 24% below the Bollinger Bands on the S&P 1500, 31% on the Russell 2000, and 27% on the NASDAQ. This thicker gray area underneath tells you where they were yesterday. Big left shift, and the bucket analysis saying, hold on, but we're getting close to a place that we expect to bounce. So that maybe that should be the theme. I don't expect a bounce to new highs. Question is, will a bounce take us to a real recovery, or just going to be a retracement of part of the pullback? Tale of two markets. On the NYSE is on the left and NASDAQ's on the right. Notice that we had a reversal today. We had a strong day on Friday, weak day on Monday, but the NYSE is still holding above its 50-day moving average. Notice that the NASDAQ has pulled down and is tagged at 200. Again, historically a place for a reversal. We've had 2 days in a row with the Hindenburg omen on the NYSE, which suggests it's getting ready to roll over. You can look here, stocks above the 17 in green, 20 in green, 50 in white, 200 in red, and this shows the percentage of stocks above those moving averages. This is what it looks like when you're ready to bounce. We're getting close to that, but not quite on the S&P 15, on the NASDAQ, but not at all on the NYSE. Here I've got new high, new lows, advanced decliners, and up-down volume. You can see on Monday it was negative across the board on each side. And again, the only change on the bottom is a confirmed Hindenburg omen on the NYSE. And then lastly, ratio charts to get a sense of where the rotation is. I'm looking for long White bars at the end, I'm looking for things that are pointing up here. What do you see strength in? Communications, staples defensive, utilities defensive, real estate defensive, healthcare defensive. What else is weak? Technology and discretionary. So we've clearly had a rotation out of the growth leaders in tech into defensives. Now, will we bounce and see tech recover? And we'll look at some of the big tech names in a few moments. I don't know, but I'm concerned. So now we'll go into the layout model, and let's start with the top-down view. And let's go into top-down, and we could see who was positive on the sectors in the market. And the only sector that was positive on the day was real estate. Let's rank this by 2-day momentum. And what comes up to the top? ESS. And this one looks like you could probably come in here and say a breakout from trend line. You look down here, relative strength at OBV looks good. Didn't have a lot of dots, but I like the pattern. Public storage below the 200, not interested. Well tower, this is a beautiful one. This is a medical REIT, and medical is about the one thing that can count on for doing well during a tough market. You could see their earnings per share growth, surprises here, and more importantly, they pay a 2% dividend, not a big dividend, but at least your money gets worth something. Avalon Bay was one that I liked over the weekend. Lower in its pattern than some of the others and clearly breaking out here. Great relative strength at OBV. So one way would be to look at all the stocks in that sector. Another way might be to look at the leading parts of that sector. So do that and do that. And so we could look at residential REITs, healthcare, specialty, the top three, and I could either go through the list or I could actually drop down one of my trading systems. And let's look at 2-day force up. And what do we see? We see nothing made that one. Let's look at multi-time frame CPR buy. Nothing made it up. So we're not seeing a lot of these fresh buy signals that I like to look at. Let me take off this one. Maybe we'll get some here. So we had 3 here. SBAC, which I think of this more as a construction. TPC looked good over the weekend. We'll take a look at that in a second. Weyerhaeuser is one that's breaking out, but kind of low in the pattern. And then CTRE. These were some of the ones that were highly thought of. I mentioned that TPC looked good over the weekend. And let's just see what it did in the market. And consolidate some of the gains, didn't really sell off, didn't do much. So I like to play with this list and to play with this list here as well. And you can build the case to do top down. Bottoms up is more fun, to be honest. Not that it's necessarily the right thing to do. And in bottoms up, I can look at the entire market and run my scans against that. So let's do my favorite scan, which would be above 200, volume greater than 500, and meeting my criteria for a pullback and uptrend. And you could see I dropped from 3,461 stocks to, oh, come on. Takes a second to do the filter down to 126. Now let's throw in my buy signal. 2-day force up. A little slow tonight. Which means my partner's probably working on it. There we go. So we got BR, which is Broadridge Financials. Nice uptrend, pull back to the 50 and a breakout. GFL, which was on last evening, as one of the things I was interested. Actually, that was not GFL, it was GL. Sideways consolidation. HLN, Halion. Don't know anything about this, but a pretty powerful breakout. Is it on earnings? Earnings came out 227, and earnings were not great. It was 12 cents, then it got 5. So that's probably why it dipped its head and it's working its way back. Must be a story stock. Virex Analytics. Boy, was this a nasty correction very quickly, but it's now setting all-time highs. I do some research on that. I like the look there. It's not an expense, not a cheap stock. And Waste Connection. This is just doing one of my favorite scans. Another one of my favorite scans would be the multi-time frame CPR. So I'll do this every night. I'll look at some of my favorite scans this way. Charter Communications. Look for anything that looks good. FSCO, beautiful uptrend. Pullback, pays a decent dividend, and that dividend is not going to tell me because it's all right. Too new, I guess. FTS, what is FTS? Fortis. LabCorp showed up on a number of my scanners. McCormick breaking out here. Stryker, and there's Weyerhaeuser again, which showed up on a number of mine. So either through a top-down or bottoms-up approach, we can find some of the leading stocks in the market and start to build our watch list. So I want to look at a couple things. First, I want to look at MAGs, AAPL. I have to remember to put it up in here. So Apple. Apple is stumbling at the 50, but overall holding up okay. Big reversal on Friday. Amazon. Amazon broke through the 50, had a weak session in the market on Monday, down another 3%. Looks like it's heading towards the 200. AA, Netflix. This has been one of the leaders, and it's just pulled back to the 50. Free parking, pausing to refresh. Meta, very similar. Google, just look at one of them, has broken down. And then the other one is Microsoft, and it has broken down. So really, what used to be the strength of the market, the MAGs, are no longer the strength. And in fact, they look like the markets that perhaps they're heading down towards that 200-day moving average. What else do I want to show you or talk about? So I'll just summarize up my thoughts. Oh, I want to go look at the Contr ETFs. So let's say you're in an account that you can only buy long things. So I'll show you what I would be looking at. Not saying to buy them, but what I'm looking at. We can look at DOG. DOG is an ETF that represents going short the Dow. So if the Dow goes down, this goes up. So the Dow's been a leading performer. It's broken above the 50. We're about 4% or less to the 200. I pretty much am watching these, but I'm not entering them yet. I still think we're going to rally here. A break above the 200, I will be more than entering. I'll be loading up. S&P 500, we can look at SDS, which is one of the ETFs. This one goes up when the S&P 500 goes down. Same story. If it breaks above the 200, I'm going to have a lot of interest. Until then, I don't. If you want to short the NASDAQ, you can look at the Q. Let's see. SQQQ, short the Qs. You see the same pattern, long-term downtrend. Again, that 200 has been resistance in the past multiple times. So I'm expecting it to be the same, so I'm not chasing it here. But a break and close above the 200, I'm going to change my mind. TZA is a leveraged way to play short the Russell 2000, and this one has broken out nicely. In fact, if this was a stock, we'd be interested in buying it. Look at relative strength in OBV. And then another one that a lot of people like is SARK. SARK is going short the Cathie Woods ARKK Innovation Fund. So I looked at a lot of things tonight. I looked at the markets in great depth. The markets look horrible. I have broad-based sell signals. I have concerns about TLT spiking against the spider, but it's too early. When I look at the in total analysis, On some ways, I think we're getting close to a bounce, especially when I look at the charts and where we are in relationship to the 200. But then you see that second Hindenburg omen on the NYSE. So my continued belief is we are going lower. We're going to have rallies. Maybe we rally in the next 24 to 48 hours off of that support. But if I was a betting person, and I'm not, my guess is we're going to still go lower. So got to trade the market we have, not the one that I think we have or anybody else has. You have to remain nimble. There are times to be all in, and there are times to not be. And I'm going to say this is a time to not be. Raise some cash, take it easy. And if you've never looked at the Contr ETFs, they're probably worth investigating. Again, I'll be doing a launch video for the product on Wednesday. You know, I'm at 30 minutes, but I probably spent 10 minutes easy in the beginning. So in 20 minutes, I've done a deep dive into the markets, industries, and sectors, used some scans from the top down to the bottoms up, looked at all the mags and the Contr ETFs, and gave a couple of things that I'll be looking at. That's the power of a platform. Have a great day.